2 to 3 more minutes, and then we'll get it going. We'll be looking at ETH, Bitcoin. We're going to talk about what happened yesterday with ETH, as well as today, why it happened, how we could have prepared ourselves for it. We're going to talk about Bitcoin, what we're looking for coming into the weekend. Talk about gold. This one's going to be fun, right? Talking about how the last literally 2 to 3 months we've been talking about the 1670 lows, the delivery into that. We'll talk about the silver analysis that we did as well, how that's playing out. And then we're going to go into how you can start to fit trading into your daily life, as well as how we can prepare ourselves for a continuation. So a little bit's going to be technical, but most of it's going to be on the psychological side. We'll start about 2 minutes. All right, all right. I'm gonna go ahead and get this started. As I said in all of our other streams, if there is anybody new here, feel free to either unmute your mic and answer a question. You can interrupt me during stream; it's completely fine. Or feel free to at me in either stream chat or crypto chat, or stock chat, whoever you feel like adding me, and then we can get that handled as well as far as questions go. But we're gonna go ahead and jump right into this. So let's take away silver. We'll talk about silver in a little bit, but I wanted to get into ETH. And I actually want to throw on a different layout real quick so we can have this a little bit cleaner. Let's just leave this. Let's go to a different layout. Let's go to ETH. All right, and let's get this started. So today we're going to talk about the structure, what happened yesterday, right? We talked about Bitcoin's redistribution a couple days ago, how we could have prepared ourselves for that. But we're going to talk about ETH's redistribution as well, how we could have prepared ourselves for that, and what made sense within this point in time. We talked about some areas, right, where ETH could have possibly came back into, mitigated, and then started to have a pullback, right, into those areas of supply that we had talked about before. Within these areas right here, the creation of supply that we had on the breaker structure to the downside here, and then the confirmation of that, the creation of supply on the candle before, right? Price goes back up into that, takes out the early, late shorts that we can see right here, right? Late shorts are now out, late longs are now in trades, and then what happens? We mitigate that area of supply, and then we continue to the downside. So let's understand what happened next. If we created supply, if we distributed, what are we looking for after a distribution, right? What do we look for after an accumulation? So after your accumulation, right, for a full-on accumulation that we had down here, we talked about this accumulation that we had right here. What do we look for after we have the full accumulation and the breakout of the full range, right? What do we look for? We look for the continuation, right? What is the continuation going to be in the form of? It's going to be in the form of that reaccumulation for an accumulation. For distribution, it's going to be in the form of a redistribution. So after your accumulations, right, while retail sees this large move to the upside and they see this large move to the downside right here, and they look back, right? Remember, this is a 4-hour chart. They look back, it's right here at this point in time, right? Price is right here, and they see this, and this. They see all this entire downtrend, right? And at this point in time, it's been what, months on end since March, right? Within just this range right here, but obviously since November we've been bearish where that supply introduction was. But we need to understand what retail was looking at this point in time. They see this chart, right? They see this. They see a top starting to form, what they believe is a top, double, triple top, right? What does that tell us? And this is something that's going to be pretty cool too in a second when we get to the understanding of these double and triple tops. But from a retail perspective, right, they see a large downtrend over and over again, and then they see this, right, and then now they're picking every single spot, whether they're quote unquote smart money, right, picking every single supply zone they can shorting off of those supply zones. We see reactions to those supply zones or not, right? They're picking boxes, picking LTF zones, picking whatever they can, right, for price to come into those areas. What does it do? It shows a reaction off of that. What is that going to now do? That's going to get more retail, more uninformed liquidity into shorts to the downside. So what is that generating, right? Stop losses over the highs. And that's where you get your double top and your triple top, those equal relative highs that we see formed within these areas right here. And now all of a sudden, all of that liquidity, all of that buildup that you had right there is a reason for price to continue to the upside after the accumulation. We created demand, had the reversal, right? Had our area of demand, another reaccumulation within here, came back down, liquidated these longs. So we took out the early longs, opened up more liquidity for algorithms to now enter the long side again, right? While simultaneously creating that short liquidity, so creating a reason to now come up. So they're adding to positions while getting retail to believe that it's going to continue to the downside, right? That reason is now formed, and now that structure break occurs here. You get the demand, and then you get the continuation to the upside after the accumulation has formed. And now all of a sudden, all of these traders are taken out of their trades, right? And this is where we get these scenarios. So now what happens, right? If we're going through the psychological understanding of the retail trader, they see this move to the upside, and they're now stop lossed out, liquidated out of their trades. They put some more money in their portfolio, right? And now they're like, okay, what do I do now? Now they start to see this formed, and now that they're taken out of their trades, right, and price starts to move higher, they start to long. They long, right, trying to take it higher. They start to get green, right? They long even more, start to put their stop losses underneath lows. Stop losses underneath lows, stop losses underneath lows. Now we are in peak premium, right, of our range from our high that caused a low. So we understand that price is now considered expensive to algorithms, right? Now what are we looking for? We're looking for the rate of the buy side liquidity. So now that all the early shorts are out, and then the introduction of supply following, right? So we see the rate of the equal highs, the buy side liquidity at peak premium within our range. What happens? We break structure to the downside with displacement, right? You can see that area that stands out. That's like, why is that there, right? And if I zoom in, you can see those displacement candles that are formed, those breaks of structures to the downside, very violent, right? Where that supply was introduced after that rate of buy side liquidity occurred. So now that they're all in their longs, right, after they've been stopped out of their shorts, after constantly shorting this to the downside over and over again, right? Short, liquidated. So they start shorting again because they're like, there's no way it can go past these highs. It starts to go past those highs. So they're like, long. It's breaking out, right? And then now they're the reason to continue to the downside. So now that we see that range starting to be formed, from an institutional perspective, right, we're looking for premium and discount. Where is price residing? Where is price creating liquidity? And where will price possibly go to next, right? So looking at our range, understanding that we are bearish, right, overall on a weekly time frame, we created this possible change of character. We could definitely come back down into these areas, right? For Ethereum, these 1200 areas. I do like this. I believe this is a weekly imbalance as well within here. I'll clean this up in a second and we'll take a look within here. But if we can liquidate these lows that we are creating on my purple chart, I did have a trend line that was drawn. We are creating a lot of trend line liquidity, and we can see the demand that's kind of being exhausted as well. Notice how now this low only created now an internal high. We can see how there's not really an imbalance or anything like that left on this move to the upside right here. It's very lethargic, right, to the upside. Then we see the rate of the buy side liquidity and the continuation to the downside. But let's talk about what happens within this price action, because we're going to talk about what happened today, right? So if we look on our higher time frames, let's just look at this trendline liquidity now that we have built up right here. Let's draw this out as a different color, right? And then let's look on our most recent structure, what happened there, right? So with that institutional perspective, as well as the understanding of the retail perspective, because we need to get that part too, right? I like to look at it from different perspectives. From the retail perspective, if I'm retail, would I long this, right? If I'm retail and I see this breakout to the upside right here, and price is constantly continuing to the upside, we talked about this on this range back here, right? Long-term breakout, they see this move to the upside, they're long, taking it to new all-time highs, right? But we understand that we broke down, created supply, came up, filled the fair value gap, broke down again, introduced supply, came back up, mitigated supply, continued to the downside, right? We can see the continuation, why it's occurring, but from a retail perspective, right? They want to be right. So once they see that breakout to the upside, they're like, there's no way price comes back to these lows, this low, this low. It's just going to continue up only, right? They get that mindset, and then all of a sudden they're taken out of their trades, and that's how they are manipulated. And 90% of traders think that way, right? That's how the markets are still here. That's how the markets are still considered healthy. That's how the markets are still moving. That's why the liquidity is present. But let's talk about our most recent structure right here. So same scenario, right? We talked about how now this low only caused an internal high. So if we wanted to see continuation to the upside, right, we were going to watch structure within these areas of demand, to see if we got a 4-hour break of structure to the upside with impulse, right, leaving that imbalance with volume. And then once that is given, we can look for that continuation to the upside, following internally into areas of supply that cause internal lows, right? We were talking about how we were looking for price to come into these areas of demand, come back up into these areas of supply, take out the longs to the downside, come down to these areas of demand that originally brought us our move out of the range, right? And then take out the early longs, start to accumulate lower, right? And then move higher if we want to see upside overall. If we want to see downside, then we're looking for price to keep longs, right? Continue to create that sell side liquidity to the downside, manipulate highs to the upside, take out all the shorts, mitigate areas of supply that are unmitigated that cause new lows, and then we'll see the continuation to the downside following confirmation within those areas. So within this most recent structure that we had right here, internally, we had our area of demand that was created, right? We saw the mitigation of that area of demand that was created, and then we saw the large move away from that. So this low that caused this high is now our internal range. Let's draw that out. Premium and discount. Let's make this a different color. Make this purple real quick. But looking at our range, our premium and discount, why am I drawing this as premium and discount? This is our most recent low that created demand on a break of structure to the upside that left imbalance, right? We can see the imbalance candle on this move to the upside right here. This is the lowest low that caused this highest high at this point in time, right? So after that occurred to the upside right there, we saw the move to the downside into this area of demand, right, from this imbalance that we had caused right here. After we broke structure to the downside internally, right, on our daily chart, this high had caused a new low. So internally, we are bearish on the daily chart, right? So that means we're looking for a 4-hour break of structure to the downside to confirm us fully bearish after the creation of supply. Meaning, after we saw this move to the downside right here, if we are looking for a lower high, we are looking for confirmation from a daily swing to a 4-hour within this area at this point in time. So if we go to the 4-hour at this point in time and we look at this area, where did the 4-hour break of structure occur and where could that be seen, right? We talk about the double break of structure. We talk about highs that cause new lows, where the candle before the candle that broke structure occurs and why it's feasible, right? Why it makes sense, right? So we came up to this area, came back into premium of this high that caused a new low, right? So if we wanted to even use this one, we can, because this is our most recent structure. This high that caused a new low, right, came back up into premium on our 4-hour time frame. We have a low that caused an internal high. We receive one move to the downside, right? So you could call that your change of character, your lower high that is created right here, lower low. Then your lower high, your second lower low. If you look to the left, you notice that this area of reaccumulation that caused this new high internally on the 4-hour time frame, right? If I were to draw it out like this swing structure was broken to the downside on that same candle, right? So now I have an area of supply from this displacement candle that stood out, right? Candle before that candle, area of supply. Price comes right back into that and then continues to the downside, right? So now we can see from a daily to a 4-hour perspective where that supply introduction was, why it made sense. because we broke down on the daily time frame, came back up into premium, rated the highs, broke structure to the downside, introduced supply, continued to the downside. And now we're creating more liquidity. You can see us bouncing off of this trend line we have right here. We have a lot of clean equal lows that are being presented, right? And we're sitting around equilibrium within this range right now. So if I wanted to be long bias, I would want to see a rate of the lows into areas of demand with the creation of buy side liquidity on the way, meaning that we are creating lethargic moves to the downside, a lot of clean equal highs. And then as we start to mitigate those areas, we mitigate it, see a move away from it, see a liquidation, right? And then we see the introduction, then we see the mitigation, the move away from it, then the final demand, reaccumulation, continuation to the upside once that occurs right there. So if I wanted to see that, as we are looking at this is what I wanted to be looking for from the long perspective. But as you guys know, we are looking for continuation. So as far as that goes, I'm still looking for downside to the downside, right? We talked about Bitcoin. We'll talk about it in a second. But those 17.5K monthly and weekly equal lows that were created, but we definitely could see a move down within these areas. But you can use that as confluence as well. For ETH, if I'm looking for more downside into areas of demand that caused a new high, right? I would be looking for lower for Bitcoin as well, right? That's just from some confluence. This doesn't happen every single time, obviously. Obviously, looking at the charts from the technical perspective, we're going to be doing it from this analysis every single time, but you can use that as confluence, right? So with that being said, take away this, we'll talk about our most recent structure where we're at right here. Look at the 4-hour time frame if I wanted to see any types of moves. Right now we came down into this area. We're mitigating this candle that caused an internal high. We could still see it move up into that area of supply that we had talked about within premium. This could be pure inducement, right? We do see some equal highs that are being created. Internally, this low caused this high right here. So if instead this is a break of structure, right, and a mitigation of demand from the area that caused that break of structure to the upside, we can see where that started right here, where price broke to the upside with impulse. Let's throw in the volume. Let's see if the volume says the same thing. Comes into this area. Yeah, we see some volume on this move to the upside right here. Low volume on this swing move. High volume on this push to the upside right here. So we could possibly see a move to the upside, taking out these highs, or even just coming to this area of supply right here and then continuing to the downside into those lows. But to be able to play this at this point in time, I would watch the 4-hour structure. We just mitigated this area, so I would look for a raid of equal lows within our area and then a break of structure with displacement. You can look for an hourly double break as well if you wanted to play it a little bit riskier. Let me go ahead and take off the volume right here. But looking at this, understanding where we are at right now, we saw the demand on that move to the upside right here. So internally, this low caused this new high. So this can be a weak high if this high does not cause a new low. So if instead we create demand within this area and break structure to the upside, now this high has not caused this new low, right, with impulse. So we need to break areas that of supply that were caused, right? So we need to break this area to the upside with impulse for this high to now be taken out, right? But overall, we are still bearish, so we're looking at areas of supply than we are, over areas of demand, right? We came into this area, rated the highs, and then broke structure to the downside. So if I'm looking at areas of supply, we have an institutional candle here. You can use the entire consolidation if you would like as well, but I have this 1588 zone. We could see just a rate of the lows, and this demand could be used just to push back up here. This demand could be used to push all the way through if we break structure to the upside right here. This demand could be used to push all the way through to the supply zone up here, or this demand could be ran through right here. In this lower time frame, could be a redistribution, right? We haven't created any new highs yet, so I would assume downside until proven wrong, but we're starting to show some type of consolidation, right? But as far as this goes, we understand there's multiple possibilities. We have multiple areas, multiple points of interest, right? And we understand multiple possibilities. So we wait for our areas, right, of our steps of analysis to then come into play, right? For your trading style, how they come into play within our areas. If it's shown, go for it. If it's not shown, don't go for it, right? It's as simple as that. So we understand that. Let's go ahead and go over to Bitcoin now. All right, we talked about this area as a possible area of demand for, again, continuation to the upside as well. But we also talked about that weekly draw to the lows, that liquidity that we are more than likely going to reach over the reversal just because the structure isn't fully there yet, right? But with Bitcoin, it is telling a little bit of a different story to me. And the reasoning I say this is because on our higher time frames with ETH, and let me just go back to ETH real quick. We'll go on the 3-day and the 2-day. But if we look at ETH, right, we can see that 3-day break of structure to the downside right here that we had with this displacement. We saw the rate of the highs, and then we see another displacement candle to the downside. With ETH, it does definitely look a lot more bearish to me personally than Bitcoin does. And the reasoning for this is this area right here. This impulsive candle to the upside, mind you, this is a 3-day chart, so we can go to the 2-day chart as well. Candle before this candle that possibly broke structure, we still need to create a higher low, so we'll be looking looking on this for even the 12-hour, 4-hour, and below as far as the structure goes, but right now it's not shown. But within this area, right, we came back into discount, we took out shorts, we still have nope, we took out these longs as well. We have the weekly equal lows as well. And now we're sitting within this area of possible demand. And the reasoning I say possible demand, right, is because we're waiting for the confirmation of that area within here. But on the 2-day chart, we can see it's in a clean area, that candle before that candle that broke structure to the upside. But we did come into that area very quickly. And the reasoning I say that is we want to look for price to generate liquidity into our areas of supply and demand. So, for example, if I just bring this back into our areas of supply, right, daily imbalance, we'll just draw this out. From here to here, you can see we came up, mitigated the 0.5 of that, 50% of that. But we want to see that generation of liquidity and the manipulation to the opposite end of where we want to take it, meaning within this scenario, if we were taking this to the downside, as we came up into that daily fair value gap, were we generating liquidity to the downside? Yes, we were. How is that shown? With the clean equal lows, right? Clean trend lines. This is something that, if you guys are new, will blow your mind, but trend lines are strictly liquidity because retail, right, every time is taking longs off of this, right, taking it to the upside, putting their stops underneath these lows. So let's just draw this out. I have no idea why I did that. Let me fix these longs real quick. Okay, there we go. But anyway, they're sitting here, right? They're trying to continuously take this long to the upside after they believe it's already broken out. So they waited for a huge impulsive move to the upside, waited for the bounce of the trend line, right? And now they're placing their stops underneath these lows, taking longs to the upside over and over again, right? Trying to reach areas of supply, trying to catch a bottom, whatever it is. But they take a long on this move right here, right? Place their stops underneath the lows. Take a long right here, place their stops underneath the lows. If they start to be down, right, where are they going to place their stops next? At these lows right here, right? They're like, there's no way it's going to continue to the upside right there. So we can see the clean equal lows that we formed when we came into these areas. The clean area of uninformed liquidity who was trying to take this to the upside, who saw breakout and said higher low, continuation, right? But instead, we came into that area of daily fair value and generated liquidity while manipulating highs. So taking out shorts, introducing supply, breaking structure to the downside, right? And then the reason from the liquidity is now available, and then that is there. But looking at the current structure that we are in, as far as this goes, as far as Bitcoin, we talked about this area of possible demand, still looking for possible higher lows, but the overall draw on liquidity is still that 17.5 weekly and monthly sell side liquidity that we have present, right? So if I go on my lower time frames, if we're looking for continuation to the downside, I would look for closures and then a move back up either into this area of supply that would be created from here if we break structure to the downside. If instead we continue to manipulate lows, break structure to the upside after mitigation of these areas, candle before candle that broke that structure point to the upside, then we could possibly see continuation into this area, this weak high, and continuation to the upside overall. But currently, I'm believing that we create supply within these areas, use this area of demand as an area for people to get into more longs, and then we see a move to the upside. We take out these longs, and or we come up into these areas of supply, right? We can see the breakdown occurred right here. So we have fair value. This is obviously a 12-hour chart. If I go on my lower time frames, we saw some consolidation within this area as well. So that could be our next area of supply, but we could look for a price to consolidate within these areas of demand, take out the highs, and then break structure to the downside, continue to that 17.5 weekly liquidity goal that we have. But understanding where we are at again, if we wanted to see the higher low formation, I would be looking at that higher time frame. So I'd be looking at a daily time frame even within these areas for the break of structure to the upside with impulse for the continuation overall, because this pump could have just been a straight liquid and continuation to the downside, creating supply, right? And then heading toward that weekly liquidity goal that we have there. So that was Bitcoin. I'm not going to be taking any trades coming into tomorrow or into the weekend. I've been trying to limit it myself to at least it's been around 1 to 2 a week. Sometimes I've been taking more, but 1 to 2 is the goal as far as trades that I want to be taking during the week. Only looking for 2.5% a week as far as that goes. Don't rush anything. You guys don't need to be right. Again, you just need to be profitable. So coming here, working on your game, sitting down and practicing, right? Going back testing, trying to really see this for yourself, see this come into light and start to understand that is going to be what elevates you and takes you to the top of your game, right? And takes you past your peers. But sitting here and either just listening or trying to not, or taking this, right, and then walking away in one ear out the other, that type of mentality, right, it's not going to get you where it wants you want to be within this trading game. If you want to gamble, right, if that is your thing, then by all means, I'm not going to tell you how to trade, right? But from this institutional perspective, from what we are looking at, putting in that work, putting in that effort, really trying to study these and then go back and saying, was he wrong within this scenario, or was he right? And based off of what he said, or based off of what was shown, right? To just get those learning little innuendos, little ideas, because now you have that muscle memory in the back of your head. So now that that behavior starts to come on the chart again, you get that PTSD, right? And then now you don't enter or you enter. Because now you see it coming into light over and over again. But that was Bitcoin. I want to show you guys Bitcoin. And now we're going to get into XAU. So we've been talking about this one for months. Let's go to my green layout real quick. We've been talking about this one for months. We've been talking about that weekly liquidity goal as well as that area of demand, right, that we can see that is presented right here. So we had these weekly equal lows. We had this area of imbalance. After this breaks the structure to the upside, we're looking at the weekly, okay? So this low caused this high. After liquidity rate to the downside, we mitigated demand, came up into this area. What happened next? We created a ton of equal lows, took out all of these highs, and then what happened here? Weekly broke structure to the downside. So what does that tell me within an area of peak premium, right? After we have rated the highs, that we have introduced supply and are now on a bearish trend, right? Instead of that bullish trend. So as you can see over and over again, even if we go into replay mode, again, from that retail perspective, what do they see? What are they looking at this point in time? They don't see a move here. They don't see the weak high here. And then they don't see the break of structure to the downside here after the rate of the highs within peak premium of our range. Where's the imbalance? We can see the imbalance here. Where's the liquidity? We can see the liquidity here. What liquidity got taken out? Buy side. Where did structure break? Upside or downside, right? Within premium. So now that we have that and everything is being shown, we're looking for continuation into discount overall. Overall, we're looking still for this. right? We came up, created a high, higher low, continuation. This is a weekly chart, right? We're still using the same theory, the same mindset, the same understanding of a 5-minute chart to the weekly chart. It's the same exact theory, idea, set of form that we come to a conclusion when looking at these charts, right? But we came into these areas, took out this buy side liquidity, broke structure to the downside, and what is retail doing at this point in time? They're saying instead of a break of structure, right? They're saying demand, imbalance, break of structure to the upside. We're going to continue. Look at these equal highs. I even said this myself, right? Look at these equal highs. We might continue to the upside and take this out, right? But we don't have to. Now that that structure has shifted, and now that the goal has been met to the downside or to the upside, right, on this buy side raid, and then the breakage structures, we're looking for now the downside within areas of discount. Okay, so now that we have this, and now that we're looking at this, retail is giving us reasons to continue to the downside, right? Constantly longing these areas of demand, constantly longing these demand zones. And this was about right here when we talked about gold. When we first originally started getting into gold, talking about where we're looking for the goal, where was that price? Where did that happen, right? You guys can go back on the lessons. I believe it was July 11th. Even before that we were talking about the continuation to the downside within these areas, right? Because we are constantly creating that sell side liquidity and continuing to break down. So if we look from a weekly perspective, we saw the weekly break of structure to the downside. We're now waiting, right, for the rate of the buy side liquidity on the daily chart. So we're waiting for the liquidation and then the break of structure on the daily chart for now the weekly and then the daily to be in place. Where does that happen? We can see it happens right here. This high caused this low right here. We came up into that area of supply from where we broke structure to the downside. Right, we came into this candle, and then what did we do? We ran the highs and then broke structure to the downside with displacement. Where's your candle before that candle that broke structure to the downside? We can see that is being shown right here. We have our area of supply on the daily chart where price is going to respect. We're looking for price to respect, right, and continue to the downside. So if we go ahead and play this out, we can see it respects that, and if we get this new low, that puts our daily chart or our weekly and now our daily all aligned, right? So now that happens, we'll wait for it to play out. We get that break of structure to the downside. We get that displacement so that all that demand, right, all of retail that was constantly trying to find reasons to take this to the upside, whether they saw this and said institutional candle or last sell before buy candle, right? Within these areas, they're like, this low caused this high, it's going to continue to the upside. What's the order flow? Downside. So we're only looking for downside until proven wrong. Right, we came into this area, wicked this area, and then we saw what thought to be was a break of structure. Was this a break of structure? Let's look at that candle before that candle that broke structure. Did it come into that area of demand? Yes, it did. What did it do? It invalidated it. What does that do? That disproves me. So if I wanted to take this to the upside and I saw this daily move to the upside and said, oh, this is a structure break, right? How is this going to occur? Are we going to continue up into areas of supply right here and then continue to the downside? How is this going to work, right? If I didn't look at it and understand it at that point in time, once we come into this area, we break structure to the downside and take out that area of demand. We close within that area or deep past that area, right? We liquidate these lows. What does that put in? Break a structure to the downside, right? With displacement, we can see that candle that stands out to us. We come back into those areas of supply, mitigate those areas of supply, and then continue to the downside. So while retail, and literally 80%, it's on the MyFX book. I wish I could pull it up for you guys. I will post it, but looking at this, 80% of retail was net long. They wanted to see those new highs, right? But was it there? It was not. So it's not going to happen unless the structure is shown, unless everything comes into play. It is not going to move. That is just really how it works. That is literally the definition. You can sit there, you can FOMO as much as you want, right? But until all the early buyers and the early sellers and that goal is met from an algorithmic and institutional perspective, that move is not going to occur, right? So with that being said, we understand that we came into these areas, broke structure to the downside, instead introduced supply and not demand, right? This was just lower time frame demand for price to continue into supply, right? We invalidated that, came back up into supply, and then we continued to the downside. We now have clean displacement, right? We've now broken out of this whole range from this move, or from this low, right, to this high right here. What does that tell me? Bearish, 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 bearish. We're going to continue to the downside until proven otherwise. If we notice here, we can see this wick from this low that caused this high right here. We can see these equal lows that lie just before it too. So price still has the possibility of coming up into areas of supply and continuing to the downside at this point in time from this area of demand. But we're not looking for price to come into areas of demand up here, anything like that, or sorry, supply up here, or anything like that. And the reasoning from that is because we have no structure breaks or introductions of demand on the right side of the chart at this point in time. So now that we watch it play out, we see the delivery into these lows right here. And it was at this point in time, on this first move to the downside, or actually it was right here that we were looking at this and we said, okay, how is this going to play out? What are we looking for? And without any of these areas, without any areas of supply or anything like that, what can be seen from this and what was shown at that point in time was we saw the move to the downside. We saw price start to stagnate, right? I'll play this out. We saw price start to move higher. We saw a daily break of structure to the upside. Right, and then we were looking for lower. So at this point in time, now that this daily has broken structure to the upside, I'm looking for a weekly pullback. So where did the daily break structure to the downside? We saw it broke right here. Where did it confirm that? On this move to the downside right here with displacement. Here's our displacement candle. Where's your candle before that candle that broke structure to the downside? Right here, right? So now we have our area of supply, or our order block, whatever you want to call it, right, within this area. I just call it supply. But once we have that move to the upside right there, we're looking for the continuation into this high to make a lower high to now continue into our weekly liquidity goal. So we looked at it like this. We said price is going to come up here, come down, create a lower high, continue to the downside, into the weekly liquidity goal, into the demand, right, and continue to the upside. At that point in time, or it could easily continue to the downside, right? But we're still looking at the overall bullish trend on the monthly time frame, right? Our higher time frames. Once we come into those areas, if we see a weekly break of structure to the upside, then we'll look for those swings to take it into areas higher overall. But at this point in time, we said we're looking for that lower high, looking for the supply creation after we run highs, and looking for the continuation into the lows. Retail is saying low that caused a new high, right? And they're longing over and over and over again. They see demand, 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 right? They're drawing zones, drawing whatever they can, trying to justify reasons to hold their position when really they're just on the wrong side of the market, right? So now if we go ahead and take a look at this, we'll play this out as it comes up into our areas of supply and demand, or sorry, supply at this point in time. We can see it comes up into that candle, mitigates that perfectly. Look on our lower time frames now. Where's our 4-hour break of structure to the downside? Take this off, sorry. Looking for a 4-hour break now with displacement. There's your displacement on that move to the downside right here. I think I had it was a daily at this point in time. So now that the daily has been broken, right, your daily pullback. So daily switched bullish right here. Now daily is bearish. So now your weekly and your daily are back in alignment. Waiting for the 4-hour now, waiting for some type of redistribution. We get that redistribution on the 4-hour candle to the downside right here. Here's an entry available within here. We can wait for the entire range breakdown for a lot more confirmation, which is what happened here. Completely fine as well. We get a displacement on this move to the downside right here. We have an area of demand, and now we have an area of supply. Consolidation before the breakdown, shown right here, right? Consolidation before the move to the upside, shown right here. So now that we're filling this area of imbalance, just looking for this into this area of supply, continuation to the downside. Let's go ahead and play this out. You can go on lower time frames. 4-hour to the 1 now. We'll wait for the hourly to switch. Then these areas, we get the move, we get the displacement, we get the break of structure, we have an area of supply. Again, drop base drop, area of supply. come up into that area, mitigate that, liquidate that, break structure to the downside, right? We have our first area of supply. We run highs right here, create more supply on lower time frames. It brings me to it, which is perfect. We end up breaking structure on the 5-minute time frame, start to come lower, create that clean liquidity now, those equal lows. So what is retail saying? Right, they see this as, oh, it's broken out. What do they see? However many day downtrend breakout, right? They're like, I'm going to take this to the upside. It's going to the upside. We know that we broke down. We have an area of supply. They're constantly longing, right? Notice how we didn't mitigate this area of demand. Instead, we just mitigated this imbalance and started to move up, showing lethargic moves, right? So once we come into this area, and once that had occurred, go ahead and watch the lower time frames now. Let's bring that back. All right, we can see those breaks of structures to the downside. Here's your M on lower time frames. Go ahead and play it out. As we come up into these areas, we're looking for price to mitigate this high that caused this low internally, and then break structure to the downside on the lower time frames. Hopefully it gives me the one. Yes, it does. Perfect. We come up into this area. We raid the highs, so now that all the shorts are taken out of their trades from this high to this low right here, we are within premium at this point in time. We're looking for the breakdown within these areas, so I'm looking for price to break structure to the downside right here with displacement, or break structure to the downside after creating it within these areas. We break that structure point to the downside that we can see was shown right here with the M. So we had a lick raid to the upside, right? And then we had our lower high, our lower low, lower high, lower low. So this is our area of supply. I believe it was a 2-minute or a 3-minute. Look at the 3-minute. Yes, it was the 3-minute with the displacement. Put it over that candle, this entire area of supply. And then once that was occurred and you are now entered within your trade, we're looking for the higher time frame. So the first area that I'm looking to take profit from this high to this low can be right here, right? So at this point in time, if I were to draw out another short, the reasoning from this is to maintain safety at these areas. And the reasoning I say this is because if I go back on the higher time frames, we still don't have, right, the full breakdown from these lows that cause new highs right here. So we could possibly come into these areas of demand, continue to the upside. So this is how we stay safe, stay protected within these points in times. We could take profit within these areas and either one, set stops to break even, or two, keep our stops open. But now that we have taken profits, this risk is going to be nothing, right? So now that we have that, and you're okay with taking those profits at this point, it's an 8-to-1. Right, we have the entry, we have the move away from that we can see occurred right here, the move back up into that candle from the break of structure to the downside, stops over the supply zone that had occurred right here, then the move to the downside following. Now we're targeting that overall goal, right? So retail is looking for demand, 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 demand. So we're looking for the constant creation of lows while manipulating highs for the continuation to the downside at this point in time. So now that all my timeframes are in alignment, from now the weekly to the daily to the 4-hour to the 1-hour to the 15 to the 5 to the 1 to even the seconds, I now have that available entry holding for a weekly goal. That's how my style of analysis and style of institutional analysis for swings work, and that's how it makes sense. So if I were to now get into this trade, right, and let's say I couldn't hold for this entire area, right, I now have areas to either add onto it or areas to hedge. So if I look at this and see this area of demand and price comes back down into this area, right, and then starts to show some type of bullish structure, I now have a long opportunity into areas of supply that caused lows overall. So this is how the narrative is built, and this is how we can start to hedge our trades and start to capitalize off of these moves over and over, because now that I, one, take profits within a relative take profit, right, and then I now have the ability to enter again after it comes back into areas of supply. And then two, have the ability to hedge now that I have my overall narrative, right? We have more opportunity to now protect ourselves and gain more profitability. So looking at this, looking at that entry that we had right there, looking at the full play out of this 187 to 1, let's just go ahead and drop it, let it go. Right, we can look at it right here. We can see the M on the 4-hour as well. But we get that move to the downside, immediately takes out those lows, right? You have your area of first take profit. We can see it comes into this demand right here. What does it start to do? Again, right? Create more lows. And then once it creates those equal lows, what is that now? Fuel for price to continue to the downside. So now that that has happened, right? And if you wanted to wait for this one, even more confirmation, completely fine. I entered on the creation of supply on this move right here. Wait for the displacement, wait for the candle before, entire area of supply, right here, comes up into that, continues to the downside overall. First take profit is here, second take profit is these areas of weekly lows, right? And then the third could be these areas of demand overall. But looking at this, understanding it now at this point in time, we're now at our areas of demand. Retail is still looking for continuation to the upside, so they're looking for the breaks to the upside, right? They're looking for trendline breakouts, whatever it is. We're looking for the creation of equal lows while we manipulate highs, mitigate areas of supply, and continue to the downside. What do we see? We see price start to make a move to the upside right here. Come up, take out the highs. What is it doing? Manipulating highs. What is it doing? Leaving lows. What is it doing? Manipulating highs, leaving lows. We can see that it's starting to build up that trend line liquidity. You can look at it from here. All right, we see 2 taps right there. Let's see if we get a third. We even get a third right here. That trend line liquidity that is being built. Push to the upside. Mitigation of supply from our last liquidation rate to the upside. Break a structure to the downside. What do we do? Introduce new supply, continue to the downside, break structure to the downside with displacement. Now at this point in time, everything is bearish, and this is when I was telling you guys on Tuesday, we're looking for downside no matter what, right? Straight to the weekly equal lows. We ended up getting that. We rated highs, continued to the downside, exactly what we were looking for before. So let's look at within this range how this made sense. So where is your first break of structure after we ran highs? Let's first draw our range from our low to our high. Apologies. So we have our low to our high here, where we first started consolidating, right? Where are we within the range? Where is this making sense, right? And where can we look to possibly take these trades? So we saw this break of structure to the downside here. So this low caused a high, broke into the downside right here. We can see this impulsive move to the downside right here. We're looking for price to hold that lower high. So that first institutional candle, the highest high, apologies, right here. After we had rated that liquidity, so we saw the move to the upside, we saw breaks of structures to the downside, and the continuation following. So now at the 15, right, let's look on the 5, lower time frame, so we can see this area, and then we saw the move away from it. So your second area of supply, right, is holding around here. Within these areas, go ahead and play it out, see if price comes up into those areas, taps those areas, right, and then continues to the downside. So now we come up into that area of supply from the 15 to the 5 after you break a structure to the downside right here. And 1, we could run the highs, create new supply, and then continue to the downside. Or 2, respect this high, continue to the downside here, which it looks like we do when we take out this high right here. And then now that we are creating that, again, liquidity to the downside, the reason to continue to the downside from a institutional perspective, right? Those equal lows that we can see are being formed within these areas right here. Now that we do that, this is your strong high that caused this internal low. This low does not cause a new high. We break structure to the downside after rating highs and instead creating displacement. What happens, right? We raid those areas. We start to see highs being taken out. We start to see breaks of structures to the downside. We raid these highs right here. Still hold this internal high that caused this internal low. Still hold this high that caused this low right here. We can see right now all it's doing is just raiding those highs, coming further into these areas right here, and then breaking internal structure to the downside. So we're still manipulating highs. What happens? We start to have displacement, breaks of structures. We start to see some type of continuation. And at this point in time, we're looking for the full range goal into those weekly equal lows. And that's why I was looking for highs to be rated and the continuation to the downside. And that's why I had this drawn out yesterday. Or sorry, not yesterday, but on Tuesday as it was. So now that that happens, we get the breaker structure to the downside. Price comes back up into those areas of supply and then just drops off from that. Let's go ahead and play this out. This is on a 5-minute chart, but we'll look at this, see what happens, see why this occurs. Retail again, right? Demand, 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 demand. Rated the lows, they're like buy side, whatever it is, right? They see this move to the upside, but what instead happens? It's now fuel for them to continue to the downside into those weekly targets, which we see prices currently sitting at. But that is XAU. We talked about the entry too. There's a detailed stream on the entry from the higher time frames to the lower time frames on this particular trade right here on the channel. I can link it for you guys, or you can just go on the playlist and you'll see it as is there. But as far as that goes, I wanted to go over that with you guys so you can get an understanding as to how I swing trade with lower time frame entries from a higher time frame to lower time frame perspective, and what we're looking for every single time. Because if you guys noticed, from our higher time frames to lower time frames, we saw the same exact behavior. We were looking at the same raids to the upside and breaks of structures to the downside, the same candle before the candle areas of supply, right? Over and over again, from our weekly to our 4-hour to our 1-hour, 5-minute, 1-minute, right? Over and over again, where that supply was introduced, why the continuation to the downside occurred, where it occurred, and why it makes sense, right? So with that being said, that was XAU. That was a 187 to 1 trade. How it was feasible, obviously, it's not a full 187 to 1. I didn't just full margin this and then hold the entire thing with take profits being taken out at other areas, right, of supply and demand. You are looking at a lower averaged R&R, but overall on the chart, right, on the trading view chart, we can see that 186, 187 to 1, how that went, how that played out, why it made sense, why we were looking for continuation to the downside. So now with that being said, right, we have about 5 to 10 minutes left, and now I want to talk about how we can prepare ourselves for that continuation, or we did talk about how we can prepare ourselves, but I want to talk about how we can now begin to fit this type of lifestyle, not just this particular one, but any, as far as scalping, swinging, intraday, whatever you like to play, into play. Now, with that being said, right, this is more of a psychological part of the stream, so we're going to go ahead and get into this now. So fitting this into your daily life, right, fitting trading into your daily life from an institutional perspective, how I personally trade, can fit many ways. Personally, I believe less is more. I believe smooth is fast, right? I believe that is where the money is made. The less setups you take, but with more conviction, meaning you are very, very confident in that play based off of your analysis, based off of more confluences, right, coming together, that almost perfect setup coming into play for you. As far as that goes, right, if you are waiting for those setups, if you are a swing trader, as far as that goes, we are looking for about 1 to 2 trades a week. And swing trading is 1 to 2 to 3 days. Position traders I like to think of as months more or weeks plus, right? This was more of a position trade. This was a month. But looking at these ideal scenarios like this, if we want to fit these ideals, this way of making money, right, into our daily life, we need to understand what we want first. So that is one of the biggest questions that you have to ask yourselves. What do you want? What do you want in trading? So do you want a lot of money? Do you want the passion, right? Are you really, really passionate about trading? Do you really like it? Do you want other things? Do you want it as a venture to create a business, right? Or as some type of avenue? There's multiple ways that people come into trading. One of the main ways, right, is because people are without finances in general, right? So they don't have a lot of money. They want a quick way to make that money, and this is the way to make that money. So coming into this and only looking at it for the money, right? What is that going to do? That's now going to bring a sense of greed into action and into play. So now you're taking profits based off of how much you are up, or going or taking out trades based off of how much you are down, right? And you're not following a system, a plan. Instead, you just like to gain, so you take them. Not trading based off of the chart, based off of your execution, right? Based off of your plan. So understanding what that is, if we want to fit this into our daily life and we want to get those executions down to a T, from take profit to stop loss, right? We need to, one, understand that this is probability. This is going to happen as it does. This losses will happen, right? But as an institutional trader, as your perspective, that's why we have those lower time frame entries, right? For the low R&R, or sorry, high R&R, lower win rate type of setups to where we can risk or sacrifice more losses for the ability to make more on the next trade, right? And this turns the tables as we've talked about before. But if you want to fit this into your daily life and you've asked yourself, what do I want in trading? The how, right? How that actually happens and how that sets itself up should be irrelevant at this point in time, because if you know what you want, you're going to know how to get there, right? The steps are going to be needed to be taken to get there, and once that starts to occur, now you have this ideology. So go back test, go look at your trades that you have performed the best on, and go look at those trades. Go look at the time they were taken. Go look at how many you took at that point in time, or the type of setup it was, whether it was a short or long. Um, Go label those definitions, right? Can you take your strategy and explain it to a 10-year-old, right? Theoretically, can you do that? Um, can you write that down with a few 4 or 5 steps, right, on a sheet of paper for that to be understood? Is that plausible? Right? You need to start asking yourself these things and start to get that system, because now that you have asked yourself those questions, now that you know how to get there, and now that you have both back testing and forward testing of your losses and your wins and your break evens, you now have the ability to now know your strengths and your weaknesses. So now you can look at your weaknesses and know how to eliminate them and or make them stronger, right? So this now builds a system that you can start to capitalize off of and become more confident in, right? And more repetitive. But overall, if you want to begin to fit this into your daily life from a scalp position, from a swing position, from a position trader, right, area, from just a intraday perspective, right? However you're trading, whatever it is, you need to ask yourself that, because everybody is going to be different. Everyone has different lives. Everyone does different things, right? So if your hobbies or your job doesn't allow you to trade during New York session, but you can trade during London session, then why are you trying to take trades at work, right? When it just doesn't make sense. That's more gambling than anything. You can still wait for London session or Tokyo session, right, to occur. Find the pairs that still go into Tokyo session, right, that move during Tokyo session. Start to analyze those, start to understand them, and then start to trade those. And now you have the ability to go to work. You have the ability to come home. You have the ability to trade, and then you have the ability to go about your day, right? This is how we can start to make it a job. So if you don't work and if you're just trading, right, try to avoid being on the charts for 8 hours a day. Because if you're on the charts for 8 hours a day and all that did was create scenarios in your head and manipulate out of certain trades, you just spent 8 hours a day working for free, right? Or if you lost money, you just spent 8 hours a day working and you lost money, right? Is that what we want as a business? No, we do not. We want our business to be profitable. So if we set our rules in place and follow those rules as an employee would, right, from a business perspective, then we can start to maintain and hone in on our style and start to become better in that way. But with that being said, that was just a talk on how I wanted to help you guys fit this into your daily life. This is going to come in many different shapes and forms, but it's about what is comfortable to you and how this works for you in your daily life. Because if you're stressing out at the charts at 2 a.m. after a 12-hour shift, right, all day, and then you shouldn't be trading really at those times, right? You should try to figure out something else, or if you can't trade at those certain times at all, then don't trade, right? It's as simple as it is. We need to be as stress-free as possible to allow us that clarity when looking at these charts and not get emotional when trying to take trades either to the upside or to the downside, and try to make up scenarios, right? Try to make your money back, because it's not going to happen. The market is going to move how the market is going to move. There's nothing you can do about that but follow it and manage risk accordingly. So with that being said, thank you guys all for watching this. Talked about continuation theory, everything on the list we went over today. We will go over USDJPY later, but looking at this, as far as this is understood, this was XAU. This is why it made sense. This is why retail was long while we were short. This is why we ended up coming out on top, right, as far as that goes. And we can look for similar behavior like this within every pair in the future. But as far as that being said, right, I don't believe there were any questions or anything like that. If you guys have any questions, feel free to ask them now. I'll let it go for the next 2 minutes or so, and then I'm gonna go ahead and end it here. But thank you guys all for joining. Thank you guys for joining the stream, sitting here, listening to me ramble, sitting here listening to me go over all of this. With that being said, thank you, thank you. I don't think there are any. Yeah, no, I don't think there are any questions or anything like that. I am gonna go ahead and end the stream here. This one was recorded, so this one was not recorded. I got this one recorded. I'll send it out to the YouTube following. But thank you guys again, and I hope you guys have a great rest of your day and or night. If you guys want any charts or anything like that, just at me in chat. I will be around. But thank you, and I will catch you all later.